Welcome to the latest episode of Millennial Money. Now, last time I talked about the importance of diversification, investing in a different range of assets to diversify your portfolio and limit the potential downside. Now, how do you do that? It actually means you've got to invest in a range of different assets. So if you are a low risk investor, that might be cash, then bonds, and moving up the scale as the more investment risk you want to take, which with the potential for more investment reward and actually losses, you move up towards things like equities and some of the more high risk esoteric types of investment. Now, if you can't afford financial advice, then you might have to do this yourself. And if you go to calculators.moneytothemmasses.com/investment, there's a calculator on there that looks at some of the main ETFs out there that are run by the likes of Vanguard, which build portfolios with a range of assets already in them. And by using that calculator, you can get a steer of the types of diversification and asset combinations you could potentially use. Now, one principle that's often used in the world of asset management is the age guide. And by that I mean you take your age, so let's assume you are 30 years old, you take it away from the number 100, so that gives you 70, and that's the equity content that your portfolio could have. So you've got a longer time frame in which to invest in assets and for them to recover if, say, for example, the stock market has a wobble. Now, that calculator uses that principle, assumes a bit of a medium risk profile because you need to understand your own tolerance to risk and the kind of investments that you will be happy with holding over the longer term. So that calculator will give you a nice idea of the amount that you could potentially invest in things like equities in North America, maybe in Europe, maybe in the Far East, how much you might put in bonds, how much you might put in things like cash. So have a go at that calculator. If you are new to investing, do go and have a look at the likes of Nutmeg, Money Farm, Wealth Simple. These are the companies often called robo-advisors, and what they do is they will give you a questionnaire which will go through and assess your risk tolerance and give you a portfolio, suggest a portfolio that you could buy that has that ready-made mix of assets. And that portfolio should suit your needs. And of course, you can change over time. You don't have to stay in one particular portfolio, or your asset allocation can change over time as you become more confident with investing. If nothing else, if you use some of these services, they can give you an idea of a portfolio and what sort of funds you might invest in, that you could potentially go and do it yourself if you have the confidence to do so. If this video has sparked your interest in investing, then go to the moneytothemmasses.com website where we've created a beginner's guide to investing. So just search for beginner's guide to investing in the search bar and you will find the article. So that is it for this week on Millennial Money. Don't forget to join us next week for more on investing, and also to follow us on Instagram, Twitter, Money to the Masses with the number 2, and join our Facebook community.